spaces support the sorry support the creation of steady rental yields. Bring It brings in global investors and also offers greater liquidity. Companies are increasingly focused on building annuity-based portfolios for stable cash flows alongside traditional project sales. Then we have sustainability and green building. They are now mainstream. The shift towards IGBC and LEED certified projects reflects an industry-wide commitment to eco-friendly design, water and energy conservation. Large buyers and institutional investors are now prioritizing environmental, social and governance standards (ESGs), prompting widespread adoption of green practices. Then we have technology and prop tech integration. Digital transformation is reshaping how real estate is designed, sold, and maintained. From 3D walkthroughs and AI-driven led scoring for sales to digital project management, predictive maintenance, and smart home features for operational efficiency. Now, and number seven, we have the industry. Basically, we talk about how the industry is becoming more financially disciplined. There's a strong focus on developing after years of high borrowing. Many now prefer JDAs and JVs, as mentioned earlier, over outright land purchases to keep business asset light. Reliance on private equity and global institutional capital, such as Blackstone, Brookfield, and GIC, is on the rise as well. Now, finally, at number eight, companies are pursuing customer-centric branding. This involves digital marketing, outreach to NRI networks, and community events, but also crucially delivering projects on time and building trust with better after-sales services. Innovative branding efforts, including premium sub-brands and loyalty programs, are becoming more and more common to retain and grow customer bases. Basically, in summary, these strategies are expanding regionally, they're consolidating the sector and balancing portfolio risk. And they're monetizing the assets by prioritizing sustainability, leveraging technology, and improving financial discipline, as well as enhancing and improving customer trust. And all these factors, I believe, are going to shape the next. We believe are going to shape the next phase of growth and stability in the Indian real estate sector.
Okay.
Now, moving on to sir, enterprise value. Um, Here, sir, I'll be very honest with you. I was having some difficulty with the enterprise value initially. So I only used one metric, which is EV per thousand square kilometer. Sorry, per thousand square meters, if that is all right.
Okay. No issue.
Okay, so moving on to enterprise value. In real estate, traditional ratios like PE or EBITDA margin call can be misleading due to project-based cash flows and volatility. So to standardize comparisons, we used EV per thousand square meters, which normalizes company valuations based on how much developable or saleable land they have an land name, sorry, area they have under their control, making possible to compare the firms of different sizes and business models. So the EV reflects the market value of the operating business, including debt and cash, while dividing by land bank or saleable area, and which removes basically the noise from short-term earning swings. For example, Oberoi Realty commands the highest EV per thousand square meters at 2,73,554. Indic sorry. Oh, sorry, the number. Yeah, this one, sir.
Yeah. Oberoi Realty is the most expensive, out of all of
Yes, sir.
them.
Yes. So their
So why
enterprise
there is such
value.
a big difference, Godrej and Oberoi? I mean,
Yes, sir. Considering the projects that they are doing, the area under them is a lot more, and their margins, as per that, are much greater also.
okay. So that's why
So
they're commanding a higher valuation, basically.
yes, sir. Yes, sir. Because as you can see that their enterprise value at individually is in the middle range, and the total area under them is, well, how do I put this? Relatively, their enterprise value is much higher than the other companies. So I am not able to put it in the right
Yeah,
words.
I got it. Actually, what you are saying, the total area is basically the land parcel which they are, or the total land bank which they're holding basically at the
Yes,
moment,
sir.
or what? Is it that?
Yes. Yes, sir. So like
Okay.
it is basically indicating investor confidence in their premium Mumbai projects and scarcity value.
Okay.
Next, we have Lodha Group or Macrotech, which stands at 1.36 lakhs with diversified scale. while DLF comes in at 59,000,
Hmm.
roughly, driven by 59,301, sorry, driven by massive volume in NCR and Gurgaon, but lower premium per unit area. On the mid range, we have Prestige Estates at 48,145, showing balanced growth in South India. Then we have Signature Global, which targets affordable housing but is valued at 34,944 per square meter due to volume focus rather than margin. Then we have Sova Limited, which records 13,005 rupees, and Brigade at 31,440, both reflecting regional focus and moderate premium. Now, now Godrej property clocks in at 34,691 and is supported by strong design and brand equity. By tracking the EV per 1,000 square meter, we benchmark how much value the market assigns to each developer's asset base. So the premiums reflect location, brand, and execution strength. This metric enables investors to compare future potential rather than just past earnings, clarifying whose land banks and project pipelines are most highly valued by the market. It is a vital tool for strategic investment decisions in the real estate sector. Um, and I think we can move on to the next portion, sir.
Sure.
Okay. So now we have the Excel, the sheet with all the financials, and let Madhav take over for this.
Okay.
Yeah.
Just
So
make it
let's
little
look
bit,
at,
I
Focus
mean, zoom
group.
it up little bit.
Okay. Um,
Make it to 75%. Yeah. So you have chosen how many? Godrej, DLF, then
so Yoda go.
yeah, Lodha, and then we have the Prestige, then Signature Global India, then Shobha, and then Brigade, and finally the Oberoi. Okay. And
Alright.
in terms of market cap, which one is the biggest one? DLF.
So, yes, sir.
So ठीक है चलो, and then so you have done price to book and then price to sales. Okay, now you can just go ahead, please.
Yeah. So, let's look at the financial profiles, focusing on valuation growth and analyst views. First, we have Godrej Properties. It trades at 2,145 rupees per share with a market cap of 64,615 crores.